All right, good day, folks. Today's analysis takes us to soybean meal. Should be symbol ZM on most platforms, soybean meal. It is part of the soy complex. You have soybeans, soybean oil, as well as soybean meal. Now, soybeans is the more popular, more liquid contract, but we also pay attention to soybean oil and soybean meal. They are most of the time pretty correlated, but sometimes they do stray off and have because they do have their own nuances. Soybean meal is primarily used in food and animal feeds. It is a byproduct of soybean oil, and meal, along with its sister markets in the grain complex, including soy as well as corn and wheat, have very nice seasonal tendencies. So this is what we're looking at today, a trade that started on or around February 25th, so last week, with an end date on or around March 12th, has displayed an 80% win rate over 15 years. It's 15 years of data. And what I like to see when I look at AnyScan, this is our smart seasonal scanner software, is I like to see this nice consistency. I like to look down at the trade history table, and I want to see nice consistency. Doesn't have to be too much or too less, but overall I want to see more green than red, and I want to see consistent trade data. We have a little bit of a larger gain here in 08, a little bit of a larger loss here in 2012. You should be able to put the eyeball test to it to see if it's a trade that may be worth taking. You can also look at this table. We always want to see an upward sloping equity curve, and based off of just trading only one contract going back to 06 to this year, we can see a nice upward sloping equity curve, total profit of around $9,300. Now, to put this in further visual perspective, we can look at a seasonal price average chart, and here we are right in the beginning of March. We have a 5-year price average there in red, 15-year price average in black, 30-year price average here in red. You can see that they are all sloping down. We do have a little bit of mixed price action, even to the upside before falling back down and then rising back up into the historically favorable seasonal sell trade going into June or July. So right now, we have seasonal price averages in line from the 5, 15, and 30. We also know that we have nice trade data, 80% win rate or greater over 15 years. So now let's go to the chart and see what kind of opportunities we have. Now, this is a weekly chart on the left, daily chart on the right. Going back in time, first of all, let's take a look at this weekly chart. We've absolutely exploded to the upside here since early August, almost in a too much of a vertical fashion. Grains, as well as the commodity complex in general, but we are now bumping up here into 786 resistance, which we did reject, and we're now testing the 618, and that's based off of the 2016 lows up to the 2014 highs. Now, if we go to the smaller time frame or the daily chart, what do we have here? Well, we have a long-term uptrend line that has been well respected, going back to the August lows, August time frame that we talked about over here. But now we are starting to crack or break that trend line. What else do we have? We have a high probability 1, 2, 3 top pattern. 1, 2, 3. Notice how it coincides with the trend line break. So our trend line break is right here, right below the number 2. And you'll see that we've had a couple days here where we did break that number 2. We don't like to take the initial break. We want to see a break and then a full close below the number 2, and then preferably a couple of retests before we go to the short side. Our profit target on this particular trade is very simple. The calculation is a measurement from the high of the 1 to the low of the 2, measured down. So we measure from here to here, and then we measure down, and that gives us our calculated profit objective. And that takes us right here into this past price structure of around 380 to 370. Why is this area important? This is the area where we pretty much came back and retested the trend line retest, and the market exploded new highs, taking out these old highs. So once we start breaking down, we'll be looking for a move from approximately 415, 420 area down to 380, 370 area. Our initial risk will be tucked above the number 3 high right here around 445, 450 area. And if the market does continue to move down in our favor, we can trail our stops above the minor swing highs and above the trend line. Now, there is no ETF that tracks soy meal. There are some commodity ETFs that do have grain exposure. The best bet is to trade soybean meal outright or the options on soy meal futures. If you have any questions, reach out to us at support@Seasonal Swing Trader. Good luck, good trading, and we'll see you on the next update.